Hi, I'm Danny Ecker with your Chicago Business Today Midday Report. A Boston investor has paid $70 million for the antennas on top of the Hancock Tower as the skyscraper's new owners, who took over the defaulted debt on the building earlier this year, continue to sell off its parts piece by piece rather than selling it to one buyer. Here with more on the strategy is our Albie Galoon. Albie, an interesting approach here by the new ownership. Is it feasible that they could be getting a lot more by selling this piece by piece rather than the entire building?
Seems to be working out so far for them. They've sold off the retail space, the restaurant space, the observatory, and now the towers on top of the building, and that adds up to $260 million. And if you throw in the office space, which is on the market, and some people think will fetch $210 or $215 million, you get to about $475 million. And if you look at what the property traded for in 2007, that was $383 million. So clearly the potential exists for this property to be worth a lot more than it was at the peak of the boom in 2007.
And so you might think that maybe the previous ownership group, maybe if they could have tried this strategy, maybe why didn't they sell off piece by piece? Maybe would have helped them avoid defaulting on the debt.
It's a good question, and maybe they're asking themselves that right now. But you know, it's hard to know what their situation was. You know, they were facing a debt maturity, and they had $400 million in debt. This was Goldman Sachs and Golub, and they had to pay it off, and they didn't pay it off in time. And so these new investors, Deutsche Bank and North Star, came in, bought up the defaulted debt, and took over the property.
So the Hancock Tower, I mean, this is a trophy property in downtown Chicago, but it was also one of the more distressed, or maybe perhaps the most distressed property in the city. The fact that you know, for some of the prices that some of these pieces have been sold for, what does it say about sort of the recovering commercial real estate market right now?
Well, it clearly is recovering, and it's recovering very quickly. If you look at the situation 12 months ago and the situation now, if the prior owners couldn't figure out a way to refinance this property 12 months ago, and now the new owners are able to sell off these pieces for as much money as they're getting, that tells you a little bit about what's happened. You know, the market is strong. It's especially strong in, you know, downtown for trophy properties, which are valued at very high levels. Investors are bidding up for them. It's a little bit different in other parts of the market. You know, it's in some ways it's a tale of two markets, but in downtown Chicago and for trophy properties like the Hancock building, demand from investors is very strong.
All right, well, the pieces of the Hancock keep selling off here. Probably more to come next year. All right, thanks a lot.
Thank you.